All righty. Hello, everyone. Welcome to Getting Started with Technical Analysis. My name is Barbara Armstrong. I'm a coach and senior manager with Charles Schwab. I have got the fantastic Mr. James Boyd riding shotgun in the chat today. James and I, go at least 10 years back. He's a friend and a fellow coach, and we like to tease one another, as you may know. But yeah, if you've got questions and you're with us live, please don't hesitate to type those into the chat. And between James and I, we should have answers for you. Today, we're going to do a little bit of a lot of things. We've gone through the whole rotation. We've done a couple of bonus sessions, one on Fibonacci's. We did one on, if you're getting started with trading, how to approach it, kind of the 7 or 8 things I wish I had known. And today, we are going to look at technical analysis as a whole. So some interesting things are happening in the market today, and we're going to kind of look at that from the perspective of a technician, of a person who trades and looks at charts, and how all the things that we've looked at over the last 8 or 10 weeks, Fibonacci's, trend, flag patterns, conditional entries, all that kind of stuff, how that can all help us make more informed decisions. So that's what we're up to today. If you are not following us on X, you're missing out. So I invite you to do that. My handle at Barb Armstrong CS, James at James Boyd CS. And I want to thank, just as we get going, all of you who show up on a regular basis, and those who are brand new, please type a greeting into the chat. But to our usual suspects, Riceberg and Scott and Paul and Kevin and Sharon and Jay and Ted and Charles and Josh and the rest of the gang, thank you all for being here. Much appreciated. All right, so just before we get into the thick of things, know that everything that we're going to look at today, and we're going to look at a ton of charts, but it's for general information purposes only. None of it to be construed as a recommendation to trade any particular stock or strategy. We use the Paper Money software application on the Thinkorswim desktop platform. So that's the system we're using today. Know that if we discuss options, that options carry a high level of risk and aren't suitable for all investors. In Paper Money, which is where we're doing our example trades, know that short options will never be assigned early in Paper Money. That can happen in a live account. I've seen it happen. That's a possibility. Okay, let me do 2 things. One, if you've never been to a live event, now if you're brand new, the advanced options 2-day workshop may not be for you, but if you've been at this for a while, and I know a lot of you have, these 2-day events I think are absolutely fantastic. And the next one coming up is April 10th and 11th, the weekend after next, at the Gaylord Texan Resort, which is a pretty cool resort. So if you'd like to attend that event, it's free to register. We'll provide, breakfast and lunch, and we'll even pay for your parking. You just have to show up. And then we're going to Boston for the first time in several years. This will be an intro to technical analysis and an intro to options, April 17th and 18th. And then mid-May, we're going to be in Chicago for a market drive. If you've never been to a market drive, we start out, we go from here's what's happening globally in the markets right down to here's an individual stock and how a trader might consider trading it. We look at what's happening, with tariffs within our own borders, with sectors, the whole 9 yards, all in one day. So it's a pretty cool event also. And then this, we do in a 9-week rotation. This is kind of the 3rd bonus session before we perhaps go back to the beginning of our rotation again. Okay, so when we come and look at the S&P 500, this line here is a 100-day moving average. The red line is a 30, and the blue is a 10. And what we have seen of late is that this fastest moving average, the 10-day moving average, has been acting as a ceiling or a resistance level. And if we come up to this recent high and draw a line down to this low yesterday, we were down almost 10%. 10% puts us in correction territory. Now we've recovered a little bit, and there's lots of talk today. The S&P 500 up 2.4%. And when we come and look at the Market Watch tab and look at the S&P 500, especially a lot of these heavy hitters are up today, which has driven, this 2.4% gain. And then if we come to visualization and click on that and come to Index Watch and then choose S&P 500, we can see that almost 80% of the stocks in the S&P are up today. And if we come and we look at the NASDAQ 100, we've got like 80% of the stocks up today. Marvell being the heaviest hitter, the one up the most, followed by ON Semiconductor. So 2 tech stocks leading the pack. And of course, the one dragging them down, Constellation Energy, down 7.5%. But, just because we're seeing a lot of green on the screen, as a technician, when we look at this, what might this be setting up? Go ahead and type that into the chat. What might this pattern be setting up? And I'm going to bring out my drawing tool. I hate to lead the witness. No, I don't. What might this pattern be setting up? What do we call this pattern? Could this be a bear flag? It could. Yeah, Barbara, you got it. Jay, yep. Yeah, and so Zach is saying this could be a fake out, like it's a bullish day, but it doesn't, one day does not a trend make. Ted's saying a falling slinky, heartburn. I really like that. And we're still have, if we were to create a channel, which we could easily do. So, and let's do that. I like the way you guys are thinking. So, if we start our channel here, some people are wick people, some people are not. But you just want to you're trying to touch as many candles as you can when you're drawing this line. And then if I duplicate it and bring it over here, we've been trading in this channel. And just because we have one day, it doesn't mean we've broken out of the channel. Okay. Now, when we come and we look at the NASDAQ, yeah, kind of a similar look and feel, right? And here from this high, we're down 12%. So we're still, we were in correction territory there. We're up almost 3% today. I wouldn't say roll up the carpets, Chicken Little is done, because now we're down, 9.7%. This still feels correction-ish to me. But what this also might say is we might see a lot of things that are bouncing up that are in a downtrend, that might be setting up a bear flag, that might be giving us an opportunity to place a trade. Yeah. Yeah, Jay is saying, I think I'm going to stay on the curb, because there could be another, Mack truck or another runaway bus coming our way. And yeah. And, so all of the indexes are showing variations on this same kind of theme, the 4 major indices. We're seeing the same thing on the Dow today, all of them up over 2%. And our VIX, of course, yesterday, it closed above 30. And when we look at the last couple of years, we haven't seen a lot of close days above this 30 line. And today, falling dramatically down to 26, but 26 still has us in the nosebleeds. That's still historically pretty high over the last couple of years. And Paul is saying, sometimes the best play is not to play or no play at all. And that can be true. But on the other hand, maybe this could be setting up a bit of a sideways pattern or a double bottom, or, if we look at, I think it was Marvell. Was it Marvell? I just posted something. Yeah. So let's get a little more up close and personal. So, if we look at Marvell, what kind of pattern are we seeing here if we're playing I Spy with my little eye? And I posted this on X this morning. We're seeing an inverted head and shoulders, right? And then it broke out, and it's like, oh, was it actually a breakout the first time it broke out right here? Turned out to be a bit of a fake out, and then we had this big down day, and today it's breaking out again. Now, some might say, well, I may want to, just bide my time, but there was an announcement today that NVIDIA is investing $2 billion, in this company and what it can provide. And so that's no small chunk of change. And so that may be the reason that the stock is up 13% today. And, because yesterday it closed here. And yet when you look at this chart, you're saying, well, it's just breaking out again. We could say that this is a legitimate entry, right? And it's gone from 72 to 93. So this is about a 20-point move. And so a technician might look at this and say, well, if I were to expect this continue to move bullishly, I might put my target about $20 above this 93. So 103, I might put a target around 113. And if it does not go according to plan, where might I put an exit? I might say, well, I'm expecting this kind of 93-ish dollar level to hold. And if it doesn't hold, then, I want to get out. If it goes more than 3% below that 93 level, not going according to plan. And so this is one way of establishing a target. Okay. And in some ways, like if we look at the tech sector, tech has been struggling. So if we came here and we said, well, let's look at, the S&P 500, I don't want to give anybody whiplash here, the sector indices, and, how have these indices been doing? Well, if we look at this is a 3-month chart. So if we say, which ones have been the strongest, it's been energy, materials, utilities. Tech is third from the bottom, but it's moving up. It was at the very bottom. And if we click on that, we can see this has really been downtrending and looks pretty similar to the NASDAQ and the S&P, like the major indices. Well, not surprising because it's such a big part of, it's almost half of the NASDAQ, the tech sector. And so, but within a downtrending market and within a downtrending sector, sometimes we can have an outlier, and some might say, well, Western Digital might be one of those. Like this is a stock that's up 54% year to date, where when we look at the S&P, it's down 5%. So talk about outperforming. So, just because an index is, or a sector is not strong, it doesn't mean there aren't sometimes pockets of strength in individual stocks. And so if we wanted to do a trade on Marvell, taking the news into account and this pattern on the charts, if we were to buy, and let's say, we want to do some legging in. So this account has about $500,000 in it. If we said, well, a position size would be 5% of our account, how about we just buy 100 shares to start? And then we could buy another 100 if it continues to go up. If our target is at about 113, we've got some room to move. And then if we take this $93 range for support and put our stop 3% below that, it would be around 90.21. Now, the market sometimes will hover around round numbers. Now, it doesn't seem to have done that with this stock. Like it doesn't seem to be, 90 doesn't seem to be acting as a support level. So we're going to come in, we're going to right click, we're going to buy custom with an OCO bracket. And our target on this is going to be 113. And our exit is going to be at 90.21. And so in this account, we don't want to risk more than 0.5% on any single trade. So we're going to, we don't want to risk more than 2,500. Well, here, and a stop isn't a guarantee that we're going to get out at exactly that price, but we're risking about $870. If you come to confirm and send, it'll say $871 a share, and our target would bring in $14 a share. So we're going to put that in our stocks with targets. I'm going to move my water bottle out of the way. And we can put a note in here that this is a target based on a head and shoulders pattern. Actually, it's an invert. If we want to get technical, which this is, getting started with technical analysis, so we are getting technical. So if you're looking at this down the road and saying, like, how did I come up with that price target? That's how you came up with it. Okay, so let's look at, let's go back and look at WDC again. And here, we're going to put a little circle around this. And if we wanted, we could put a line on the chart. And I just kind of try and get in the neighborhood of what my target is. And then I can come in and edit it and make it 113. Just say, this is my stock target. My target. And then when I'm reviewing my trades, I can come and look at this and it's like, oh, okay, this is, so if it gets to 112.50 and we see a candle pattern like this that says, hey, this uptrend may be about ready to pull back and it's within 50 cents or $1 of my target, I might say, you know what, I'm going to cue Steve Miller and take the money and run. And it's just easier to be reminded of that, I think, sometimes when this stuff is on your chart. Now, if we look at Western Digital, this stock hit a new high. So this is insane that this has gone from $62 a share to $319 in 9 months. It is up 55% year to date. And, we've had a little bit of a pullback here, but we're still seeing higher lows and higher highs. And this candle pattern today, can anyone tell me what this candle pattern is? Let's come in a little more. So this candle pattern where we've kind of pulled back and come, it looks like we're hitting this support level is considered to be a bullish harami. So we've come down, we're rallying, and this is a candle pattern that does not require confirmation. And so, we could look at this and say, hey, you know what? I could buy some shares here and I could put in a swing target. If I was just looking, maybe like James, I'm going to a wedding in a couple of months. I'd like a little extra money. I don't know where James's wedding is. Let's say the wedding is in Paris. And so you'd like to kind of extend the vacation and stay for, an extra couple of weeks, and you'd like a little extra cash to do that. So you just want to do like a short-term trade. And so you might say, well, it's at 266 right now. What if I just put in a trade and said, hey, if it gets back up to 319, I'm cool with exiting the position. Now, we could do that a couple of ways. One, we could just put in a target and say, when it gets to 319, like we did with the last trade, I want out. Or you could do something called a buy right covered call, where you could say, well, they probably don't have a 319, but they probably have a 320. So could we come out And even if we just, let's add some extra things here. They give us 335 to 425. And typically this will fill when you do it at the, if the market's open around the mark price. We've got 54 contracts. Our example trading plan might suggest that we want to have at least 20 contracts if we're trading 20 times the number of contracts. But this bid-ask spread is really wide, you know, and they tend to get wider sometimes when they're further out of the money. And so we might say, well, you know, maybe we'll come out here to May, and this is much tighter. Like the dollar value is the same, but this is an $11.65 versus $12.70. So it's about $1 wide, the bid-ask spread, but that's still under 10%. And so if we came out to May, and typically with a buy right, you want to be somewhere in that, you want to be somewhere in the 20 to 50 day time frame. So if we came here and we said, okay, what we'd like to do is buy, we're buying covered stock. And so this would cost us $225,415. And, you know, we said we don't want a position size more than about 25,000. So that just comes in right under the bill. Now, how much could we make? Well, if we're paying $254 and we're called out at $330, then the most we could make on this, and I think actually the system will do the math for us, we could make $7,573. Well, that would pay for a couple of flights to Paris, wouldn't it? You know, so we could make $75 a share. And so, you know, if that's of interest, you know, and if we're called out, like, let's say it went up to $350 a share, are we going to be sad? No, because we've just said, hey, you know, we're cool with this level of profit. And if you take a look at that and you say, well, this is a $25,000 investment. If I could make 7,573, what is that as a percentage? So let's come and get our little calculator going here. We're going to switch our gadget and say, if we could make, just compress this a little bit because I didn't write those numbers down. So it's 330 minus 254.80, 7. So if we could make $75.20 a share, or $75 a share, divided by, let's call it 255. That's like a 29% return. Like, that's ridiculous. Like, that would be pretty sweet if in fact we were able to pull that off. And yet that doesn't seem that far-fetched, does it? And so we're going to, you know, if we want to put this on our chart, we're going to make this 320. And this is a buy right, expiring in May at 320. So we're giving this like 45 days. We're giving this 45 days to go that distance. Okay, now what if it doesn't work out? Well, I like the way you're thinking to ask that question, because this is sitting pretty close to a support level, right? And so if we say, well, when we look at this, the 30-day moving average has been really acting as support. If we look at a recent low, so that was 249.06 yesterday, 249.06 times 0.97. If it goes 3% below that, we're going to call it a day. So our stop then would be at 241.58. So we're going to, when we look at our trade, we are going to create an opposite order. Whoops. Change that back. I have to come to single order first. Now you know what happens if you don't change your advanced order. Right click, create an opposite order. And then we're going to make it a market order. So why am I doing that? Well, I'm doing that because I don't know what that option will be worth if I get stopped out. I know it will be worth less, but I don't know exactly what it's worth. And so I want to both buy back the call I've sold if we decide to exit the position, and then sell the stock at the same time. And this will do both. And again, no guarantee if it gaps down, we could be out at a lower price than that 241. Actually, it was 58. We want to get particular. Hit save, confirm and send. So the most we can make on this is 7,551. Now our stop is at 241.58. So that's $13 below the price that we're paying to get in. But this max loss, why does it say 25,449? Because it's not recognizing that we've put this stop loss in. This would be the loss if it went to zero. So that explains that. And this is really our covered call is at a swing target. So what's the disadvantage of doing this as a buy right covered call instead of just like putting in a swing target? Well, it could hit the swing target like in 10 days and we would have been out with that profit. We wouldn't have made that extra 1170 or 1265 though. And then the value of this option, if it does go up, will become higher. And so, you know, we are going to end up having to be in this trade longer likely than if we just did a swing trade, but there is the potential that we could make more. So somebody's saying like, we could just sell a put. And yeah, we could do that also. You're tying up a similar amount of money. So if we looked at like, hey, here's the recent low at 249. So let's say we came out this, if we wanted to come out 45 days, we might say, hey, I only want to come out a couple of weeks. So if it was at 249, what if I sold this put like just below this? So it's at 249 and it's like, hey, if I'm willing to buy this, I could sell this put at 245 and it expires in 17 days. And one of the advantages of, you know, volatility being higher is that premiums are higher. And this is a volatile stock. Like the implied volatility on this stock is high. Like they're saying in the next 17 days, this stock could move $40 up or down. That's what this plus or minus is telling us. You know, and if it's at 267 right now and we buy this 245, like this is saying like, hey, you know, there's a probability that this could be in the money and it could be put to us. And so some do this as a revenue generating trade. Some might say, well, I'm doing this because if the stock pulls back, I wouldn't mind buying WDC at this price. You know, and others like, look at the value going down. Like this was over $10 a share just a few minutes ago. So I bet you WDC is going up. Like if we look at it in 1 day, 1 minute. Yeah. It's the last couple of minutes, it's gone up in price. And that the further away it is from your strike price, the higher the probability. So we could put this in and then compare it. You know, saying this, you know, if we did this 245 below, now this is a delta of 29. And I have the probability of it touching and the probability of it being in the money. So it's saying here, you've got a 36% probability this could be in the money come April 17th. But we also, that means, you know, at this 245 strike, we have a 65% probability of it expiring worthless, and then we get to keep this money. You know, and time decay is really working in our favor. So, you know, when we look at this, if we come to our Greeks and we look at this 245 strike, it's losing 50 cents a day. So that's 5% of its value every day, including the days the market is closed. And this weekend, we get a 3-day weekend. So this time is ticking away even when the market's closed. Yeah. So, we could do this and then compare it. So we're going to sell, and we're just selling a single. But how much cash is this tying up? Well, if you have margin, it's tying up less, but they're going to say, like, you need to put $24,500 aside, because if this is put to you, you need to have that much money in the account, or somebody's going to come knocking on your door and say, hello, you need to put some money in your account, or liquidate some other positions, or, do what you need to do to be able to buy 100 shares of this stock. Okay, so let's see if we can get our $10 for that, get a little closer to the mid. And so this is the short put, and we're going to compare this to the buy right covered call. We can come back and look at this later. But it's a way of just trying to take advantage of trend. And, we can also look at sectors. So when you look at, well, the energy sector has been really strong, but today it's down. So if we come and we look, well, let's look at a little longer trend. The last 6 months, like, energy was going a whole lot of nowhere. And then we got to the beginning of the year and it's been on a tear, but the last 2 days pulling back. So if you start looking at some stocks in this sector, like say Baker, this has been kind of setting up, what pattern do we call this? It's a bit of a pennant pattern, isn't it? And we've got this candle pattern, which I don't know if it's quite a harami. And this is called a doji. And a doji, we really want to see confirmation. We want to see it move to the upside, the next day. And so you might say, well, but it could bonk its head, on this ceiling or this resistance level again. So maybe I just wait. Or maybe we see if it's moving up tomorrow. This is one we put on our list, and we exercise some patience and say, here's a candidate for if we wanted to do something shorter term, that we don't have to wait for it to break out to the upside or break to the downside. We could maybe just put in a target that's $2.10 higher and get out when it gets close to this resistance level. Okay, so that's a way we could look at something. Or if we look at FANG, and so now we're looking at strong stocks in a sector that has been strong. And of course, this sector, it's got political issues, right? Because of the Strait of Hormuz and the war and like all the stuff going on. And so you may want to kind of tread a little lightly, but oil's up over $100 a barrel. FANG is pulled back for 3 days, but what kind of pattern, what might we see this as? Well, we might see this as a bit of a bull flag, right? Now, do we have confirmation that it's a bull flag? Not necessarily yet, because what don't we have? What we're missing is the close above the high of the low day. So we call that a hold. So we're looking for a close above the high of the low day. And right now, this one has such a long tail. We might even just say, like, hey, if this comes back above like 200, let us know. It's right now at 196. So we could put an alert in. So we can come down here and create an alert and just say, hey, if this comes above 200, bullish trade, bull flag maybe. And this is just a note from you to you. It's not a recommendation. It's just saying, hey, there might be some potential there, when this swings back to the upside. And what about, like, we're still hanging out in the energy sector here. What about Halliburton? So with Halliburton, And let me just get rid of my drawings. I was just playing before the class started. And, so we have a stock, it's up 37% year to date. So clearly outperforming any benchmark that you may have had. But, if we look at, here, how many days of a pullback? 1 day. Now we have this 2-day pullback that's starting to look like an inverted hammer, right? And so could we look at this if we were to do, we could do a conditional order, or we could say, you know what, we're just going to put this on our list. We're going to check it again tomorrow. And then when we put a target in, where might our target be? Well, we might just draw this as our flag and then say, hey, when this breaks above, I'm going to just duplicate this and come over here and say, here's our, if in fact today becomes our bottom, and it may not. This is why we wouldn't place a trade, because you know what they say about assuming, right? It sometimes it doesn't work out so well. And so we don't want to trade what we think is going to happen. We're going to trade what we see. Oh, somebody's asking, so how do you get the red boxes with year-to-date changes on the charts? There's a script that I have posted in the top of my X feed. It's called year-to-date, month-to-date, week-to-date, and you can just import that script. I also did, and if you haven't subscribed to the Trader Talks channel from Schwab Coaching, I saw we had some new people here today, so welcome to the newbies. But one of the things that I've done is I've created a little playlist, and I'm starting to re-record some of the ones that are kind of falling away. And so I did a short video, and it's here in this, turquoise section. And this is customizing Thinkorswim charts. And I go over like how to add that particular thing to your charts as well. It's 9 minutes if you want to check it out. So I'll just share that in the chat. And then I'm not going to go to X now, but that script, if you just want the script, is in the on my X feed. And then the other thing that's in here, and it's also in the it's not organized the same way, but it's also in the Getting Started with Technical Analysis. I did a bunch of shorts on different candle patterns, and we're at number 13. There's probably another 5 to go. So in the next week, you may see a couple more. You'll also see 3 or 4 more coming, coming to a station near you soon. I'm going to re-record one on the monitor page and a couple of others. And then this one just came in today. So if you go to Trading a Smaller Account, these were 6 trades that hit targets last week, either hit targets or exit. And we did a review on those 6 trades and walk through, why we placed the targets we did, why we placed the trades, and then walk through how to calculate your net gain or loss and return on risk, that kind of stuff. Now, we've done 2 trades today. One was a buy right covered call. And if you want to see an example trading plan framework, you can come and watch this. There's also one for, a simple stock investing plan, an example trading plan. So you can check that out also. So Barb is saying, do all bull flags need to hold confirmation? Well, it depends on your particular trading plan, but let's say today, or it pulled back for another day or two, and then we had a Harami type pattern. Well, you might say, well, that doesn't require a hold. There can be different candle patterns within a bull flag pattern that can give you a green light or not. And some people, when something comes back to a support level, like NVIDIA for a while was trading in this sideways range, right? Like for longer than 6 months. And so, some might have said if they had seen, and I don't have an example here, of a hammer or doji pattern, they might have said, well, it's come down here multiple times, and so I'm fairly confident, I have a higher degree of confidence. So what is a Harami pattern? Go watch that short video. Like this here is an example of a Harami pattern. So it's where the body of the second candle is totally inside the body of the candle from the day before. And that pattern, according to technicians, does not require confirmation. And in fact, what we saw happen was it continued to go up. Then it did go up. This pattern here is more of a morning star. Okay. So there's all kinds of ways we can look at these different things. Okay, lots of great questions here. Let me just scroll and make sure I haven't missed another one. Yeah, so survey, I will talk about, if there was a survey last week, I'll cover that next week. There was a survey in trading a smaller account yesterday, and I've got a list of things to address from that one. The biggest one, somebody said, would you do like 0 data expiration trades on index options? And for that, I'd say Ben Watson teaches a great class on Wednesday called Trading Index Options, and he has covered that topic. So if you go to the trade management mini sessions and put in 0 DTE, you'll see a bunch of classes on that. Or you could type in index options and you'll see lots of that. Yeah, so OBT Vault is saying, regarding that bullish Harami, you said it doesn't require confirmation. Does that mean one can enter a trade without waiting for a higher candle? Yes. So what that means is on this day, from a technician's point of view, you would have had permission to place a bullish trade. And it doesn't mean it always works out, but in this case, it did. In this case, it did. Hindsight, of course, is a beautiful thing, right? It's kind of 2020. And some people may say, well, the technicians say that this doesn't require confirmation, but I'm going to wait anyway. Well, it's your trading rule. You can do whatever you like. Okay. So I wanted to look at just a couple of other things. So, and I know we've got a wrap now, but we've got DuPont here. So industrials, it seemed to be kind of working their way back into favor. And so, we have a stock that's come back to the 100-day moving average, which has seemed to provide some support given that it broke this 30-day moving average and is moving to the upside. So technically, if you wanted to, add to the Paris fund, where might you put a target? Now, some might say, well, but I'm looking at a potential resistance level here. Was support, was a floor, seemed to become a ceiling, support, resistance. I'm going to wait for it to break above that. And that would be considered legit too. So there's just lots of things to take into account when we look at technical analysis. We didn't even get into divergences yet, which, James, with good reason likes to point out from time to time. But our 45 minutes, believe it or not, has come and gone. We did a couple of example trades today. So we bought some shares of Marvell, and then we did 2 trades on Western Digital. We did a buy right covered call, and then we sold a put, and we can compare those. So my ask as we wrap things up, if you would hit the like button, it just helps move this up in the trading algorithm so that we can get more eyes on this content. It sounds like applause to James and I, as Cameron May would like to say as well. Subscribe to the channel if you haven't done that already. Don't forget to follow James and I in the land of X, James Boyd CS, Barb Armstrong CS. And I'm now lurking over on LinkedIn, so you can come and find me there. I'm posting content there as well. And up next is Swing Trading with Mr. Mike Fairborn. So I hope you'll stick around for that. Have a really great rest of your day, guys. Friday, the markets are closed, so there will be sadly no live webcasts. So take care and enjoy. Bye for now.